So what you're looking at now is Microsoft, which is one of the companies that enables what people are committed to do. And you see that the price appreciation in Microsoft has been steady, and it's been going on for years and years. But unbelievably, Microsoft stock is now crashing along with the stock market. So what you're looking at now is Microsoft's consistent sales and their profit growth. You can see that it's not volatile. It's not going up and down. Their revenues are steadily going up and their profits are steadily going up. Now, I want to explain to you this leveraged optimization system that we're talking about, because this produced returns of over 8,000, exactly 8,867% between 2016 and 2021. Nobody says that the future is going to be exactly like the present, but I can tell you that the world is already lining up to subscribe to Microsoft just like we do. They've got hundreds of millions of subscribers now, and there are just 1 billion more people that are about to get electricity over the next few years. So here they are, and I'm going to show you how this generated 8,867%. That means that between 2017 and 2021, each $1 million grew into $88,670,000. In other words, $10,000 grew into $880,000 and change. Now, what you're seeing now is the exact history of how this happened. See, we're taking at the end of December, exactly the 21st of December, the last week of December. At that time, Microsoft stock was $63.54 on the 21st of December, 2016. Now, here's an $80 call option, a long-term call option, and it allowed the owner to buy that stock at 80. Now, you would say, why would you want to buy a stock at 80 when the stock is at $63? Well, this is for the future. And these owners know that this stock is going to appreciate. So instead of paying $63 a share, they're paying 99 cents a share, which means they're able to have 60 times as much of that company working for them. So the stock was at 63 bucks. They have the right to buy it at 80. Now we skip to January of 2018, a little over a year later. Microsoft stock is now at 90. They have the right to buy it at 80, which means that they just turned each 99 cents per share into $10. That's 10 times their money in just a little over a year. So now they want to switch to a lower cost option or warrant. The stock's at $90. They're going to have the right to buy the stock at $115. And again, why would you want the right to buy it at $115 when you can buy it right now at $90? Because instead of spending $90 a share, they're only spending $1.54 a share. So an enormously bigger amount of that stock is working for them. Now, it doesn't work every time, because here we are in January of 2019, and the stock is up to 107, but they didn't really make any money on that warrant right then. But here we are, January of 2019. The stock price is $107.71. They now buy a warrant option to buy that stock at $150. They're only paying $2.49 for it. Now, in June of 2020, about a year and a half later, the stock's now at $195. They have the right to buy it at $150. They just turned $2.49 for each share into $45, 20 times their money in just that short amount of time. Now it's June of 2020, exactly the 19th day of June of 2020. The stock's at $195, and they're going to switch now to the right, a warrant allowing them to buy the stock for $260. They were only going to pay $6.38 for it. And on 17 September 2021, this is when the technology companies really started to get sold. This is when the idea of too much inflation really became obvious in the United States. People started selling these stocks, and it happened with technology companies first. So that was the day they sold that option, that warrant. It was 17 September 2021, and they had bought it for $6.38. And now, because the stock is at $299, just about $300, they have the right to buy it for $260. They just turned $6.38 for each one, for each share, into $39.70. Another 6 times their money. And in December of 2021, at the point where the Fed is now clear they're going to raise interest rates, and when technology stocks started to crash, they got out of it now. Microsoft stock was at $327, and they just doubled the price again. $5.90 option was now $9.85, and that's where they took their profits. So what we're talking about is starting in 2017 through 2021, each $10,000 grew to $8,567,000. Each $1 million grew to 88,670,000 shares. Now they won 4 times, they lost 1 time, but the bottom line is that they just made 8,867% between 2017 and 2021. The stock went up 454%, but using this technique, they made 8,867%. Again, they turned $1 million into over $88 million. If you want to know more about what I'm doing, go to danf360.com.